BEIJING after Wall Street fell and Chinese anti-virus controls increased worries about an economic slowdown. Asian stock markets were neutral on Tuesday. Hong Kong regressed while Shanghai and Tokyo advanced. Oil costs increased after a Federal Reserve member alarmed investors last week by stating that already high interest rates could need to rise even more than anticipated to control growing inflation. Wall Street's benchmark S&P 500 index fell for another day. Concerns that the second-largest economy in the world would deteriorate are increased by China's expanding restrictions on millions of people in numerous cities to combat virus epidemics. The Nikkei 225 in Tokyo increased by 0.7% to 28,130.26, while the Shanghai Composite Index increased by 0.6% to 3,104.44. Hong Kong's Hang Seng dropped 0.7% to 17,523.71 points, while Sydney's S&P ASX 200 rose 0.6% to 7,184.10. Seoul's Kospi fell 0.5% to 2,406.79. The Indian Sensex rose 0.3% at opening to 61,316.19. Jakarta and New Zealand saw declines as Southeast Asian markets rose. The S&P 500 dropped 0.4% to 3,949.94 on Wall Street. The Nasdaq Composite, which is primarily made up of tech firms, fell 1.1% to 11,024.51. At 33,700.28, the Dow Jones Industrial Average decreased by 0.1%. It was backed by Disney's 6.3% rise following the announcement that former CEO Bob Iger will take over again. Visa dropped 2.1% and Apple declined 2.2%. Energy and consumer stocks both fell. ExxonMobil declined 1.4%, while Target decreased by 3%. After the major cities of Guangdong and Shijiazhuang ordered millions of residents to stay at home, and other cities, including the capital Beijing, closed stores and tightened restrictions on travel and other activity, worries about China's economic activity increased. This month, the Communist Party in power in China pledged to change quarantine laws and other regulations in order to lessen the negative economic effects of its zero-COVID strategy, which aims to isolate every case. However, an increase in cases is making that more difficult as cities close down businesses or order factory owners to keep their employees' contact with the outside world to a minimum. Bond yields decreased. Mortgage rates are influenced by the yield on the 10-year Treasury, which decreased from 3.83% late Friday to 3.82%. The American stock markets will be closed on Thursday in observance of Thanksgiving and will resume trading on Friday. The Fed is scheduled to release meeting minutes on Wednesday, which could provide investors with more information about strategies for battling inflation that is almost at a 4-decade high. Traders are concerned that the Fed and other central banks' unusually large rate increases this year could push the world economy into a recession. They anticipate that the Fed will increase interest rates once more in December, but only by 0.5 percentage points, following 4 increases of 0.75 percentage points, which is 3 times the standard deviation. On the New York Mercantile Exchange's computerized trading platform, benchmark U.S. crude increased 27 cents to $80.31 a barrel in the energy sector. The benchmark price for global oil trading, Brent crude, increased 42 cents to $87.87 per barrel in London. The dollar dropped from 142.17 yen on Monday to 141.78 yen today. The euro decreased slightly from $1.0240 to $1.0235.